Hi, I'm Jim Gordon, and you're watching Market 1 Minute. Joining us today is Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. Welcome, Frank.
It's great to be here, Jim.
Great to have you. Thanks for joining us. Okay, what makes investing in gold royalty and streaming companies superior?
You know, it's a great business model because there's an upfront due diligence done by technically extremely competent people. And then when they go and do this royalty, they give you the money to develop your mine. Their profit margins are 50 to 90%. That's like a software company. And two, if there's any further in production increase, it's free to them. And if you have a discovery that's more ounces of gold, that's free to them. So that to me has a beautiful moat around it, and you have higher cash flow returns on invested capital. But one of the big factors is the profit margin, and that's what quant funds look for. Profit margin allows you to deal with the volatility of revenue.
My next question for you is a two-parter. What are some of your favorite streaming and royalty companies and why?
Well, I've always loved Franco-Nevada, and I'm biased because it was the first deal I ever did as a kid in 1983. And they've been private, merged with Newmont. They spun out in 2008. And 5 years ago, there was this big push about this conference here in Vancouver, anti-royalty companies. And I said, this model is just superior. And since then, Franco-Nevada's up 280%, and the junior mining companies are down 36%. But the junior companies with Franco-Nevada has a royalty on, like Kirkland Lake, that are spectacular performers.
My next question for you is, why should investors take a closer look at GoAU ETF in comparison to, say, other gold ETFs?
Because GoAU is a quant-based discipline, and I spent about 8,000 hours going back and trying to discover what are the factors that give you this competitive advantage, like the royalty companies have a competitive advantage because of their business model. It's embedded, they're going to have high margins. So what I discovered is that the GDXJ has experienced so much dilution, bad mergers, and how does that show up? The revenue per share, that cash flow per share, the reserves per share are being diluted by 46%. So that's why it underperforms. So I said, okay, every quarter we take the data and we only high grade those that have the best metrics on a per share basis, and we use the factors. And that back testing outperformed the GDXJ 92% of the time. Now, that's a great rolling 12-month period, 92%. Since I launched it 2 years ago, it's done exactly that.
Why do you believe gold price suppression remains a key issue for investors to watch in 2020?
There's a real imbalance between fiscal and monetary policies. And whenever you get this imbalance, gold shines. And so you have this debate around the world, who has the bigger imbalance? So when you look at the two factors, it's monetary or fiscal policy. So what is monetary? Negative real interest rates, money supply. What are fiscal policies? Tax and regulations and spending. Stupid spending, bad fiscal policy. High taxation usually is bad spending. So what you're seeing is that the EU does not want to streamline regulations. It wants to use monetary policy. So they're manipulating the process with negative real interest rates to try to stimulate economic growth. And every time we get this run up in negative rates, gold takes off. So let's go back to 2011 when gold hit 1900. The 10-year US government bond was trying to seduce you to buy that 10-year bond, and you're going to lose 3% after inflation. That's what real interest rates mean. What will I pay you? Minus the inflationary rate, negative or positive. So it went from -3 to +2. That's a 500 basis point swing. Gold went from 1900 to 1000. Now it's going back negative. Gold's on a surge back up to 1500, 1550. So the drama of Iran, that's just a little bit of noise. What's really much more significant are real interest rates right now.
You travel the world, of course, a lot. You talk to a lot of people, both in the States, Canada, and Europe. 2020, of course, you'd have to be from another universe not to know it's an election year. Tell me what you think with your expertise. What could derail President Trump next November?
He's done a masterful job not realizing on manufacturing, because 1% increase in manufacturing is a 6% increase in service jobs. So we saw a huge surge in manufacturing. To take it from 9% to 11%, that goal, all of a sudden, no unemployment. All of a sudden, incomes are rising. So everyone loves it. Stock market's up, lower the taxation. Now, this trade war with China, you're seeing what's called Purchasing Manufacturers Index has gone below 50. that means contraction.
Right.
It forecasts 6 months out. If that doesn't turn soon, we're going to see commodities lower and we're going to see unemployment rising, and that would derail the election process because this is a very important component of people being elected in America.
One more question for you. What are you most bullish on in 2020?
I'm bullish on the market. I think 2020 is going to be a fantastic year. I think if Trump can get this manufacturing sector turned around, that means it's great for commodities, it's great for Canada, and you want to be long gold and platinum, palladium, it's a bullish year.
Frank, we thank you for your insights and thank you for joining us here today.
It's great being with you, Jim.
Cheers.